Good afternoon and welcome. You're watching Market IQ on NDTV Profit. I am Hersh Sayta. Quick check on where markets are. Nothing to complain about. Markets trading in a tight 90-point band, but nonetheless we are sticking and not just sticking, but even above that 22,000, comfortably above that 22,000 mark where the Nifty is concerned. Quick check on where the broader markets are at, and if we can have those numbers, you'll have it on your screen. Broader markets underperforming the Nifty as we speak, but in the green nonetheless. So no complaints from a broader market perspective either. They continue to hold out in the green. Where the Nifty Bank is concerned, it's up around 0.9% or thereabouts. That will come up shortly on your screen. But let's look at the Nifty Bank constituents, because the likes of an HDFC Bank has done fairly well in trade, at least at the start of trade today. The Nifty Bank constituents, if we can have those, and HDFC Bank doing fairly well in trade today. That's of course continuing to be the case. We are seeing that one stock itself add around 51 points to the Nifty 50 today, and outside of that you have the likes of a Reliance also, which is up a solid 1+%. Both of those adding roughly 80 points to the Nifty. So that's definitely a big plus which is coming through. Quickly on to some of the sectors in focus. You have the likes of a Nifty IT, which is up. Even the Nifty Oil and Gas up 1.5%. Not much spoken about that one. Nifty Media and Metal are the ones which are trailing, the only two major indices in the red. Nifty FMCG looking absolutely flat as we speak. But this is one such show where, today we have a guest on today's show. We have Venkatraman Srinivasan, who's the executive chairman of eMudhra, to talk to us about the 200 crore QIP, which the company has spoken about. We've also had a release with regard to the pricing of that QIP. To talk to us about that and more, welcome to NDTV Profit, sir. Good having you.
Thank you. Thank you.
Mr. Srinivasan, talk to us. Where do the fund proceeds go? 200 crore is a substantial raise, for the size at which you are at. Where are you planning to put the funds? You are managing your debt fairly well these days, so just talk to us about how capital will evolve.
There are 2-3 areas. The first area is because, as you know, we are a R&D focused company. So we have several product for the identity authentication management, and then certifying authority product we have, and also paperless transformation product. Recently, even as part of the IPO, we had developed 3 products: the IoT security, remote signing, and certificate lifecycle management. So in that continuance of that journey, 2-3 major areas, which is around the cyber security, we are going to develop product. One is on the post-quantum cryptography, and the second thing is the fully homomorphic encryption, and the third is the how to bring the PKI in the mobile phone itself. So these 3 are the new areas. So part of the proceeds, around 45 crore, will go in these 3 projects, will involve around 45 crore. So that is one area. The second area is, as you are aware, in the last 1.5 years, our US market is expanding, and we have also done a small acquisition in the US. So we feel it will continuously expand. So towards the working capital needs of the US market, another 27 crore we have earmarked for that. Then around 85 crore we have earmarked for some acquisitions, either product acquisition or services acquisition around the cyber security, digital transformation area. And the balance around 40-45 crore may go towards the general corporate expenses. So this is how the composition of 200 crore works out, which is what we want to spend in the next 15 months.
Right. So this is the kind of 15-month pipeline when it comes to your capex plans. What thereafter? Are there any plans alongside to raise any debt as well along with this? Okay, so I think we have a bit of a tech issue happening there. But we'll stick with eMudhra. Let's quickly look at the stock itself. It's doing fairly well in trade as we speak, 3.6% higher. The QIP itself is going to be a 200 crore QIP. We did speak about that. The floor price for that is 443. Of course, 5% discount at the discretion of the management could be offered, at the time of the QIP. and the stock itself is trading, well above that, the price at the floor price which the management has set out. In terms of its Q2 performance as well, the top line looks extremely strong. Just as a quick background check, the top line continues to look robust in terms of its growth number, 60% plus. Your EBITDA number, though, has gone up by just 24%, therefore diluting margins for the company. Your EBITDA margin is now below the 30% mark. We've seen over the last 5 to 6 years, the company has been able to maintain the roughly mid-30 kind of EBITDA margin, except, of course, FY21 being that COVID year. But outside of that, they've been able to maintain that EBITDA margin. But let's try and understand more. We have Mr. Srinivasan, who is back. Mr. Srinivasan, we were just trying to give our viewers some perspective, and best coming from you. So first off, any plans with regard to debt raise in parallel with this equity raise that you're doing? You've spoken about the capex plans. So any debt raise in parallel to this equity raise?
As of now, no plan for a debt raise.
Sure. And, if I can try and understand the trajectory with regard to your top line and margins, your top line has grown extremely well. Yes. What's the kind of clip now with the higher base that you will be aiming for, both in FY24 as well as beyond? I won't ask you for Q3 specifically, but if you can talk to us about FY24 as a whole and FY25 or 26, at least in the medium to long term, what's the kind of clip that one should look at?
Yeah, if you see our top line, as you are aware, we have grown from 130 crore to 180, then 250 crore this year. We are poised towards 360 crore. That is what I have indicated in all the investor meetings and all that. And also we have indicated that we will do about 30% EBITDA margin and roughly around 20% PAT margin. Because what we have done is earlier we did better margin, but now the margin is a little lower because we are reinvesting the margin for growth. So we have invested in a lot of senior people in the USA, and then we opened in Saudi Arabia, we opened our branch in Qatar, and then we have opened a subsidiary in Kenya. So with all these things, reinvestment, now the margin EBITDA is around 30 and the PAT is around 20, and we hope to maintain the margins at this level. And also from a 360 level, maybe next 1 year, we aim at a growth of around little over 30%, both including organic and inorganic growth. For the organic growth purpose, we are looking at two kind of things. One is maybe a product company which has some product which are in the cyber security area. But when we look at such, it could be a small company only. We cannot go for a very big company. The other kind of company, the service company, which is in cyber security area, where with that company, we may be able to, with their end customer, we may be able to sell the product. So with all this, we are aiming at around little over 30% growth for the next year with the same kind of margin profile.
Right. That makes sense. 30% growth plus roughly 30% margin seems to be the way in which you seem to be going forward. One last quick question I'd like to take, sir. With regard to the QIP itself, what's the kind of participation you're expecting? The mandatory limit is just about 2 investors, but would you be looking at a larger bank of investors that you'll be tapping into for this QIP?
Yeah, the up to now the reception is very good, but the final book we will be aware on Wednesday and then close the book on Wednesday. But up to now the reception is really good.
Understood. Thank you for that perspective, Mr. Srinivasan. It's been good talking with you and good getting all that perspective from you with regard to eMudhra. But let me quickly switch focus. We've hit 22,000 now, and we're going to try and break down what were the key milestones and sessions which have led up to this rally. Agam has a roundup of all of that, including valuations. Agam, speak with us.
Right. So, well, we have seen the Nifty claim 22,000. At the moment, we are looking at significant gains. It's been about 22% over the course of the last 12 months as far as the Nifty is concerned. And of course, before this, the previous milestone, which stood at around 21,000, that was conquered back in December, on the 8th of December specifically. Let's move on and talk about how long it took, in fact, to move from 21K to 22K. Well, 26 days. That's half as much as time for the earlier two 1,000 point gains for the Nifty, as you can see on your screen here. Let's move on and talk about what we have in fact seen with respect to valuations now. Now, in terms of FY25, we're expecting the Nifty, EPS to be somewhere around the 1,000 rupee mark. And of course, FY26, this of course can be disregarded because this number doesn't look correct. But let's move on and talk about the price to earnings ratio based on that. So as far as your FY25 price to earnings ratio is concerned, that stands at around 22 times. And for FY26, that's at around 20 times. Now, remember that FY25 and FY26 are still at a significant discount to the mean of the previous 5 years, that is around 25 times. This also means that the Nifty has more space not only to move towards the mean, but also move quite high and higher than that, beyond that. Now, in terms of the gainers, we did see gains in Tata Consumer, Wipro and Bajaj Auto, which were in fact the top gainers as far as the Nifty goes, and in this period, along with Adani Ports and Hero MotoCorp. In terms of point contributors, we had the most amount coming in. Nearly a quarter of these points came on account and on the back of Reliance Industries, followed by about a tenth, a little over that, from Infosys and TCS. And of course, then you had HCL Technologies and Bharti Airtel as well. But in terms of losers, and let's take a look at those which in fact weighed down on the index, we did have a little bit of weakness as far as Maruti Suzuki, HDFC Life and Eicher Motors is concerned. The losses were not significant and certainly nowhere close to the kind of gains that we've seen through the course of the last up move in the last 26 odd days. The question is that when do we in fact see the Nifty move about the mark of 23,000? It's going to be a little bit of resistance, but no harm in dreaming about it. For now, yet another milestone as far as the Nifty is concerned.
Well, yet another milestone where the Nifty is concerned. Thanks so much for that, Agam. But India's wholesale inflation, I'll shift focus to macros, has risen to a 9-month high. 0.73% is where that's coming for the month of December. Now, we have Pallavi here to give us better perspective on that number. Pallavi, talk to us about what this means.
Hi, so you're right. WPI inflation has come in at a 9-month high for the month of December. The index is at 0.73%, and that's compared to a figure of 0.26% that we saw in November. Now, we saw retail inflation come in on Friday, and that's been following a similar trajectory as well. Retail prices were up 5.7%, and that was a 4-month high. Likewise, WPI is also on a rising trend, and that's largely led by the base effect. At the same time, last year, we'd seen the index, wholesale price index, remain in de-acceleration for several months. Now, let's have a quick look at some of the key inputs in the index. Inflation in manufactured products, that's the largest component of the wholesale price index, was at minus 0.7%, so that continues to remain in de-acceleration for the 10th straight month. Primary articles inflation came in at 5.7%. Inflation in food articles rose to 9.4%. Vegetable prices, one of the key inputs of food price index, was up 9.4%. Non-food articles was down 4.7%, and fuel and power stood at minus 2.4%. So that's also remained in de-acceleration for several months now. The outlook going forward is that the index is likely to continue to remain benign, hinting at continuing comfort on input prices.
Right. Thanks so much for all of that perspective with regard to macros. Key focus continues to be inflation, and that will determine where rates go, of course, through 2024. But, we're going to take a short break for now. Stay tuned to NDTV Profit. On the other side, what we're going to do is we're going to take you through Pravek 10th City in Ayodhya, where we spoke to the general manager, Krishan Kant, about the current functioning growth outlook of the establishment. So stay tuned for that very interesting conversation. Welcome back. You're watching Market IQ on NDTV Profit. What's the one sector that's been buzzing Friday plus today? It's been Nifty IT. The kind of gains that we've seen, almost a 7+% rally on the Nifty IT, and it's largely because the IT giants have posted a decentish quarter or a better than expected quarter of earnings. But what next for the segment? Where should one see it? How should one look at earnings? What should one make of the rally? Tushar is here with all of those details.
Thank you so much, Harsh. Nifty IT has, in the year to date, has completely outperformed Nifty 50 so far. That's all down to the fact of the Q3 earnings that we have seen delivered by TCS, Infosys, Wipro and HCL Tech. So the market believes that this is the bottom. Essentially, it believes that this is the end of the IT slowdown, and the market is also pricing in softer US macros and Fed rate cuts. IT firms are also seeing some green shoots in deal making. Profitability has been maintained despite a reduction in the top line. But let's first take a quick look at the big four earnings so far. First up, TCS. First, the numbers are up here. The key takeaway is TCS is set to gain in a big way when discretionary spending returns. All the fundamentals are in place. Secondly, Infosys. One key takeaway from those numbers is that while guidance has been tightened to about 1.5 to 2%, it has from 1 to 2.5%. A strong ramp up in deals into FY25 can propel Infosys to 7.5% growth in FY25. As far as HCL Tech is concerned, the ramp up in the Verizon deals as well as the ASAP deals contributed handsomely to the top line growth. In terms of Wipro, the key takeaway is that Wipro is seeing green shoots in discretionary spending in the consulting business as well as in the double-digit growth in the order inflow. If you break down the key metrics, where do all these companies stand? So in terms of revenue, TCS has grown by 1.7%. HCL Tech was an outlier with 6% growth. The EBIT, in terms of profitability, all the companies have maintained the EBIT numbers at about 20% of whatever they have been projecting so far. The deal value is also robust at 8.1% for TCS. Most of them have delivered on the total contract value front as well, but what the conversion into revenue is what is the problem. Attrition rates. The attrition rates have actually come down to pre-pandemic levels, as we can see here. They had gone up to about 20% during the pandemic. Now they're back down. But the problem is the headcount. The net headcount has reduced for three of the four companies. Only HCL Tech has hired some people in Q3 because of the deal rampers that happened. Remember, Verizon ASAP deals happened during this quarter. Now, what does that mean for the valuations of these companies? These companies still, despite the run-up in the stock, are fairly valued as compared to the 3-year PE average that you are seeing. Back to you, Harsh.
Right, very interesting, some of those data points that were flashing on your screen on the Nifty IT. Despite the rally not looking that expensive. But unfortunately, we are completely out of time on this edition of the show. From all of us who put this show together, Market IQ on NDTV Profit, thanks so much for watching. Stay tuned to NDTV Profit. We will continue to get all the news first.
Hi, thanks so much for joining in. You're watching the Mutual Fund Show, and this is NDTV Profit. My name is Alex Matthew. Like the name suggests, this show is all about mutual funds, but the objective is to get you actionable insight so that you can make your investment decisions with confidence. Now, part of what we like to bring you on this show as an offering is the opportunity to understand the perspective of the people that manage your money, the fund manager. And from that perspective, I've got my guest today. We've got Abhishek Singh, who is the fund manager of a fund that has done quite well over the last 1 year, particularly in its category. It stood in the top of the category in 2023, and it has comfortably beaten the benchmark. Not something that we say very often for the category as a whole. Abhishek, thank you so much for taking the time, and pleasure speaking to you on NDTV Profit.
Same here, Alex. Thanks for having me on the show.
So let's start with that, because often the criticism that is leveled against fund managers in the large cap category, and we're talking about the DSP Top 100 equity fund, is that there is a difficulty in beating the benchmark. Why was that something that was achievable in 2023? What worked in your favor?
So you are right, Alex. It has been one of the most challenging categories for alpha generation, in the sense it has been very hard to beat the benchmark. But a lot of factors have kind of helped last year. The rally was broad-based. It was not concentrated in certain segments. Also, if you look at the history, typically strategies that have kind of diverged from the indexes, they have had a better chance of generating alpha, and this is something that we have embraced in the last couple of years. So those two factors help. A broad-based rally and running a relatively high active share position is what kind of helped us.
Okay, so that's a good springboard, I think, to talk about this in more detail. So help me first, before we get into the portfolio construction of it, to understand how things work. What is the strategy of the fund house as a whole? What is your own strategy and your ethos when it comes to building a portfolio?
So Alex, so the construct of the large cap category is that 80% of the weight in the fund